According to this home screen, M1 Finance says that I have lost money in my account. Look at that, minus 6.43%, but that's not the truth. I've made money in this account. So why is it that M1 Finance does a return calculation this way? They make it look like we're losing money. They show us things in a strange way, unlike most every other investing brokerage. So today we're going to talk about exactly how they do that and why, and then how to find the view in M1 Finance that makes it look normal again, normal like your bank account or any other investing account in a way that sort of makes sense to your brain. You might be asking, well, Brendan, maybe you did lose money. Look at that, minus 6.43%. Maybe you're a sucky investor. But if I scroll down, we look at all the different things that I've invested in, the slices of my pie, they're all green, up 25%, 10%, 34%. Everything in here has been a positive investment for me. So how is that the case that then overall it's down 6%? It's because M1 Finance uses a different way to calculate return. It's called money-weighted rate of return. And M1 Finance describes the market weight rate of return as something that calculates your performance based on the timing of all incoming and outgoing cash movements of a holding. This is so weird if you think about it, because cash movements, in my mind at least, are not part of my investing returns. If I'm a good investor, I should see that chart going up. I should have positive numbers. I should have some green in there, right? But if all of a sudden I withdraw some money and that craters my return, that's nonsensical to me. So why would they choose to do this? What's the point of giving us this goofy kind of return? Well, they say that their goal in doing this is to display how your account has performed for its full life, not just for its current holdings. And that's really the key, because whenever we're only focusing on the current holdings you have in your account, if you sell the things that you're sucky at, if you forget the things that you invested in that went down, then it's an incomplete picture of your overall account. It's not showing you those things anymore. And that's how most investing services actually calculate their return. That's the problem with looking at it in the more traditional way. And M1 Finance does show that to us. So thankfully, you can just go to the Holdings tab, and what that does is show you all your current positions compared to their current value. So it's only the things that are still live and active in your account. That's unrealized gain. That's saying you bought it at this much, now it's worth that much. Way to go. Look at that difference. They don't give you a history of everything that you've ever sold though. So especially if you're somebody who buys and sells fairly often or just ever, then if we only look at unrealized gains, we're not seeing the whole picture here. We're giving ourselves an artificially cherry-picked version of a return that makes us look like better investors than we really are. And so in that case, the money-weighted rate of return could be better. The tricky thing about it that I personally don't like is the fact that whenever you withdraw money, it counts it negatively against you. If you just kind of left everything in the account and you bought and sold and bought and sold, I feel like in that isolated bubble where the factors are what they are, it would make more sense to me. But you can see even here on my chart, at the end of 2023, we went from $86,000 down to $68,000. So in this case, the way M1 Finance shows that is like I had an investing loss. Like, oh man, those things that you invested in have cratered in value. That must have been a really bad time in the stock market or bad time for the dumb things you picked. No, I just withdrew 18 grand. So whenever we look in the Holdings tab and we actually see cost basis versus value, you can see the true return that I've gotten with the investments that I still hold, which is a plus almost 31% as of today. And if those terms still don't make sense to you, let's dig into that a little bit, because cost basis is one of those things that once you understand it, it makes sense, but you probably forget it all the time right after you learn it. That's what I do with these kind of terms. Cost basis is the amount of money that you put in at the very beginning to get this thing. So like, think of it with buying a house. If you bought a house 10 years ago for $200,000 and now it's worth $500,000, your cost basis was $200,000, the amount you've put into it. Then just like our investing account here, our value would be that $500,000, the appreciated larger value of the house. Hopefully it's a larger value than it was whenever your cost basis is, because that could be negative. You know, your unrealized gain could be negative. One more thing that's kind of strange with whenever you're looking at the M1 Finance overall view here of your performance, there's this term here that's called net cash flow. And at first I was like, what does that even mean? Why are they putting that in here? Because that just doesn't seem, sensical in terms of what I want to see whenever I'm looking at my investment account. And by definition, net cash flow is just the amount of cash and cash equivalents that are transferred in and out of your account. So if you've pulled out more money than you put in, your net cash flow would be negative. If you've put in more cash than you've withdrawn, it would be a positive amount. But I feel like saying that with words isn't as clear as seeing a picture. And so if you want to actually see that in a more graphical, pictorial way, then click over into your funding history section here where they show you, okay, those light blue bars are the deposits you put in, the money you've sent in, versus the withdrawals are those light gray bars. That's the money you've taken out. So you can see for a while there, I was contributing way more. The blue was much bigger than the gray. Then starting in 2022, I took a big chunk out, put some more in, put some more in 2024, and then finally in 2024, I ripped out a whole bunch of money there. I transferred funds from M1 Finance over into another investing brokerage. So now when you go back to portfolio tab and you go, oh, our net cash flow is $7,000. So even though I've done this movement in and out, in and out, in and out, I've left in more than I've pulled out, if that makes sense. Is it the most impactful thing for us to be watching and understanding and aware of? No. I think the M1 Finance just chooses to give us this extra information, this additional information in a way that I think most of us don't look and pay attention to. But it's always been a conundrum of mine why M1 Finance returns look wrong. And until you really dive into that money weighted rate of return, it doesn't really make sense. I think if I had to give it a one-liner to walk away from this video and say, I know what this means now, I can sleep easy at night, it's that money weighted rate of return is more about a timeline of events that's happened with your account. Yeah, it's going up in value, hopefully, because your investments are happening. But then if you withdraw some money, it's going to go down. And it's a more complete narrative of everything that's happened with your account, regardless of what investments you do or don't have from before. But it's a very different number than how much money have my investments made? How much up am I in the stock market this year because things have been going up? To get to there, you've got to go to your holdings tab and look at unrealized gain. That's the big difference for me. My last two M1 Finance videos are here in case you want to watch those next. Otherwise, I'll see you guys later. Thank you, channel members, for your support as always, and I'll see you guys tomorrow. Bye.